Hello and welcome to our Crunch video on what is a self-assessment and how do I file one with HMRC. If you've just started out in self-employment, if you're doing additional work alongside your main job, or you're the director of a limited company and are being paid in dividends, then it's vital that you understand the importance of completing your annual self-assessment and filing it with HMRC. The first time can be a bit stressful, but don't worry, we've put together this quick video to demystify the process. Filing your self-assessment is a lot like any household chore. The sooner you start and the more organised you can be, the more pain you'll avoid. With all that in mind, let's address some of the burning questions. What is a self-assessment? Well, in the UK, the tax year runs from the 6th of April to the 5th of April. Every year, over 11 million people in the UK have to complete a self-assessment by the 31st of January to let HMRC know what income they received in the previous tax year. This involves completing a self-assessment, or Form SA100, and is usually done online, although it's still possible to file in the old-fashioned way with a paper form. Self-assessment is HMRC's way of finding out how much income tax and national insurance you need to pay. Employees have their income tax and national insurance deducted automatically from their employment income through the pay-as-you-earn or PAYE system. This doesn't happen for self-employed workers or for some other types of income such as dividends, pensions or income from savings and investments, which is where the self-assessment comes in. So who needs to file a self-assessment? Well, as a general rule, anyone who receives income without tax already deducted needs to complete a self-assessment. That includes sole traders and limited company directors. If you receive a notice from HMRC to submit a self-assessment, you're legally obliged to comply. When should I file my self-assessment? At Crunch, we always recommend that you file your self-assessment well in advance of the 31st of January deadline. This avoids any last-minute panic and means it's easier to get help and support from HMRC or an accountant if you need it. If you don't file your return and pay any tax due on time, you'll face fines and possibly other penalties. So how do you file a self-assessment? Well, the first thing you'll need to do is get yourself registered with HMRC's online services. There's a link in the description below. You need to register by the 5th of October after the end of the tax year when you're required to file a tax return. Don't leave it too late to register, as HMRC will send you a unique taxpayer reference by post, and this can take time. Once you're registered, you'll need to sign into HMRC's online services and also into your personal tax account. You'll be able to submit your self-assessment online by providing details about your income from employment and other sources, such as self-employment, dividends and interest, and also the tax relief you wish to claim, which can include, for instance, business expenses or personal contributions into a pension. What records do you need to keep? One of the most important things you'll need to do to file an accurate self-assessment is to keep comprehensive records. The sorts of things you'll need to keep records of include, but are not limited to, self-employment income, including all your invoices and expenses, income from employment, so a P60 or a P45 if you left your job within the tax year, and a P11D if appropriate. Any dividends that you've received, if you run a limited company or own shares in another company, any pension contributions that have been made, details of any tax payment on account if you've made any previously. This won't apply if it's your first self-assessment, and much more. You can read our detailed article for the full story. There's a link in the notes below. When it comes to keeping records, such as invoices and business expenses, we don't recommend that you simply cram all your receipts into a dusty old shoebox and then panic when the time comes to do something with them. You'll need to keep all of your business-related tax records for a minimum of 6 years and produce these if HMRC asks for them. So, you need to be more organised. Luckily, our free entry-level accounting software, Crunch Free, can do all of this for you. With online accounting software, you can store your records and receipts securely in the cloud, safe in the knowledge that you won't be misplacing an expenses receipt or losing an invoice down the back of the sofa. You can also export all of your records whenever you need to. Being organised and using the right tools to keep your records will make things much simpler. If you need any support with your self-assessment, getting advice from an accountant will ensure you're doing everything correctly and reporting everything you should, as well as claiming for all the correct expenses and other tax reliefs. No one wants to pay too much in tax. If you think you'd benefit from accountancy support, Crunch offers a complete accountancy service with unlimited support and advice for limited companies and sole traders. If you're just using our Crunch free software, not a complete accountancy package, then you can still pay a small amount to use our Ask an Accountant service, where an expert accountant will spend time explaining what you need to know about running your own business and paying taxes. So, can you appeal a fine or a penalty if you miss the self-assessment deadline? If you miss the self-assessment deadline, you may be able to appeal your late payment fine or penalty under certain circumstances. For example, you may be able to avoid a fine if a close relative died shortly before the self-assessment deadline, if you've been seriously ill, or if you've experienced serious IT problems. Fines may also be waived or suspended if you're unable to file your return due to issues with HMRC's online services. On the other hand, HMRC says it will not waive fines or penalties for those who find the self-assessment just too difficult to use or who did not receive an official reminder. If you do wish to appeal against a penalty, you'll need to submit an SA370 form to HMRC. If you've missed the deadline, you really need to get on with it as soon as possible. The fines and interest penalties will just keep building up, so you need to file your self-assessment and pay any outstanding tax as soon as possible. We hope this has cleared things up for you a bit. If you're still unsure, we have a free PDF self-assessment guide that you can download and keep. The link's in the notes below. This is one of many helpful jargon-free guides designed to simplify self-employment, all in the knowledge section of crunch.co.uk. Don't forget to like and subscribe to our YouTube channel for handy tips for getting the most out of self-employment. Best of luck with filing your self-assessment, and don't forget to get your Crunch free account to make everything simpler. Thank you.